This is Nightly Business Report with Sue Herrera and Bill Griffin.
Buffett's blockbuster stocks surge as Apple soars to an all-time high after Warren Buffett says his company bought more shares of the tech giant, and it was a whole lot more.
Job shocker, the nation's unemployment rate breaks below 4% for the first time since Bill Clinton was in office. What does it mean for the Fed and interest rates?
And passing grade, how a school project for two fourth graders went from a bright idea to a Target store shelves around the country. All that and more on Nightly Business Report for Friday, May 4th.
And we do bid you good Friday evening, everybody, and welcome. Stocks rallied to finish the week. Today closing sharply higher after shrugging off a so-so jobs report, which we'll have more on in just a moment. Technology led the way today, lifted by Apple. Ahead of tomorrow's Berkshire Hathaway annual shareholder meeting, billionaire investor Warren Buffett told our Becky Quick that he bought an awful lot of shares of the iPhone maker in the first quarter.
So you bought a lot more in the first quarter?
Quite a bit more, yeah. You'll see it went up about 75 million shares.
That was enough to send Apple 4% higher. It closed at an all-time high at $183.83. That, in turn, helped power the rest of the market. The Dow rose by 332 points today, closed at 24,262. The Nasdaq climbed by 121, and the S&P added 33. But the Nasdaq was the only one to trade higher for the week.
And now to that jobs report. It wasn't a blowout number, but it wasn't a stinker either. Today's April jobs growth was not spectacular, but was, in a word, solid. The unemployment report overall had a little bit of everything, some good, some bad, and some ugly. The economy added 164,000 jobs last month. That was slightly below expectations, but not enough to create much concern. The average hourly wages inched higher, but that number, too, was ever so slightly below expectations. And here's a big number, the unemployment rate breaking below 4% for the first time since 2000. But much of that was due to more people leaving the workforce. Hampton Pearson has more.
President Donald Trump touted an economic milestone in today's jobs report. Unemployment below 4% for the first time since December 2000.
The big thing to me was cracking 4. That hasn't been done in a long time.
The jobless rate fell because fewer people were looking for work, and the overall size of the labor force shrank by 236,000. Average hourly earnings were stagnant, up just 0.1% in April and 2.6% over the last 12 months.
Thank you all.
Reigniting the debate among economists over the Trump tax cuts.
He sold the tax cut as we're going to increase profits to companies, and they're going to hire people, and they're going to raise wages. And you see wages growing very modestly. You see people dropping out of the labor force, and we missed on the numbers.
I think there's still a lot of opportunity for more growth. Businesses will continue to make investments, building on tax reform, and with the deregulation that continues to happen under the Trump administration.
So far, concerns about rising tariffs or a possible trade war with China are not impacting the employment picture. Over the past 3 months, job growth has averaged 208,000 per month. Leading the way in April, professional and business services with 54,000 new hires, and manufacturing, adding 24,000 new workers, even in industries impacted by steel tariffs. As for the Fed, the combination of a still healthy job market with few signs of inflation should keep monetary policymakers on a gradual rate hike track. For Nightly Business Report, I'm Hampton Pearson in Washington.
Let's turn to Ed Kia now for some more analysis on all of this. Ed is Chief Investment Strategist at QMA. Good to see you, Ed. Welcome back.
Thank you, Bill.
So, we've been hearing from some Fed officials who sound pretty anxious to aggressively raise rates this year. Is this the kind of report to give them pause? What do you think?
I think it will not really change much as far as their course of action. You did continue to see good job growth, and when you add back the revisions to prior months, the overall number was pretty much in line with estimates. And the wage number being a little slow in this report somewhat contradicts some of the other data we have. We got a report last week called the ECI that showed wages growing a little bit more robustly. But overall, I think what it suggests is that we are getting job increases or getting wage increases, but they're not so strong that it would cause the Fed to overreact by raising rates too aggressively.
As we said, there was a little bit of good, a little bit of bad in the report. Was there anything that stuck out to you that was worrisome or concerning at all, or not?
Well, I think it was actually a pretty solid report, as I'll use the word you did, in most respects, in the sense that there was nothing terribly disappointing. Again, the surprise was on the wage side, which if you're trying to make a living, of course, wage growth higher would be good. But from the point of view of the stock market, a little bit slower pace of wage increases reduces the risk that inflation will pick up dramatically, causing an overreaction from the Fed. And with almost every recession we've had in the post-World War II period, it's an overreaction by the Fed that ends up causing the recession to start.
I was just going to ask you about the market's response to it. We've struggled lately, the market has, even though earnings have been very strong. But today, a very different story. And how much do you think this lukewarm to solid jobs report had, maybe green-lighting the fact that inflation is not going to be a big problem?
I think it had a big impact. Actually was bigger than I would have thought based on how we started this morning. Because I think that is the big worry from the stock market's concern. We know profits are going to be good. We're worried about the possibility, of course, of geopolitics. You talked about tariffs. These sorts of things are worrying the market, and that's why we've been more volatile. But at the end of the day, it's the Fed that ends up causing recessions, and it's recessions that cause bear markets. So I think as long as the Fed continues on a gradual pace, that we get the strong profit growth that I think will be the big story for 2018 at the end of the day when it comes to the markets. The market maybe was a little calmer about that, but basically we're flat for the year now. So we need to see both continued progress on the earnings front, as well as a continued slow but modest pace of wage gains and inflation in order to keep this bull market running for a while longer.
One thing that stuck out to me was the participation rate. And specifically in some minority populations. That seems to me to be a little bit worrisome because obviously they're not counted if they're not looking for jobs. Does that concern you at all?
Well, in a way, having a lower participation rate means that the future might be better, both for the individuals who are not in the labor force that might be coaxed into going back in, and also because if there are more people that are available to work than maybe economists think, that would be another thing that would keep a lid on inflation. So it would be great if every able-bodied person could find a job and get into the labor force. We're actually heading in that direction. We've made a lot of progress. We're not quite there yet.
Yeah. Let me ask you, the 10-year has been flirting with 3%. It gets there and then it pulls back again. Where do you see rates going here in the near term? Are we destined to go much higher for a while?
I think we will go higher. So we've been thinking that we will go over 3 and maintain 3 in 2018 and the year well into the 3 territory. But I don't think we're going to see a big increase. I don't think we're going to go back to 4 or 5% on the 10-year anytime soon. There's tremendous demand for long-duration fixed income products, for long-term treasury bonds and long-term bonds issued by other countries around the world.
All right.
From insurance companies, from people that are trying to run money for pension plans. So because of that very strong demand, I don't think you're going to see a big spike in interest rates, but because the economy remains healthy, I think you will see rates go back to something closer to normal over the course of this year.
Wouldn't that be nice for savers? Ed Kean with QMA. Good to see you again. Have a good weekend.
Good to see you. Thanks.
U.S. trade officials and their Chinese counterparts wrapped up 2 days of bilateral talks in Beijing. The White House put out a statement categorizing the talks as, quote, frank discussions about trade and that, quote, immediate attention is needed to change the country's relationships over trade and investment. Eunice Yoon has more for us from Beijing.
Treasury Secretary Mnuchin and his delegation have left Beijing for Washington with little to show for their 2 days of talks here. The U.S. had come to the table with an 8-point list of demands that it presented to the Chinese shortly before the discussions. Some of the highlights: a demand that China agree to measures so that the U.S. trade deficit would be reduced by $200 billion by 2020. That by next January, China eliminate policies and practices forcing American companies to transfer technology. and that given Beijing's own industrial policies, it commit not to retaliate against restrictions on Chinese investments in sensitive U.S. industries. The Chinese had tough demands, too, that the U.S. end its investigations into alleged forced technology transfers, that it stop threats to impose tariffs on $150 billion worth of Chinese goods, and that the U.S. treat Chinese companies, such as telecom gear maker ZTE, more fairly. The state media said that the differences between the two were still relatively big, but that they were able to reach consensus on some issues, like the need to maintain close communications and to set up a mechanism to keep talking in the hopes of averting a trade war. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Now, along those lines, as you know, the White House announced earlier this week that it was deferring steel and aluminum tariffs for U.S. allies, at least for now. And while that bought time for Europe and Brazil and Australia and others to reach new trade agreements, the uncertainty of what will happen is causing headaches for some companies here at home. Kayla Tausche is in Bedford Heights, Ohio for us tonight.
Majestic Steel is a middleman, buying steel from U.S. mills and selling it to customers using it to build microwaves, air conditioners, or siding for a house.
We're selling into construction, HVAC.
Some customers need the steel the next day, others for projects months down the road. Not knowing which countries or companies will be paying tariffs then presents a challenge for CEO Todd Lebo.
Anytime you're in a volatile market and there's uncertainty, then that has a psychological effect on companies in terms of how they're going to manage the buying and selling of their product.
It's not just Majestic, and it's not just steel and aluminum. In late May, the U.S. Trade Representative could choose to slap tariffs on a broad range of goods from China, totaling $50 billion, and could target another $100 billion after that.
The 22nd of May is the last day on which comments can be made on the initial $50 billion. We'll have some period to process that, and after that, we legally can put them into place.
Trade negotiations wrapped Friday in Beijing with a decision by both sides to keep talking. The high tensions have a range of industries on alert, like brewers with equipment for beer making on the potential tariff list. Footwear companies worried they'll be swept up too. 90% of Steve Madden shoes are made in China. CEO Ed Rosenfeld says even in the case of tariffs, long-term manufacturing decisions can't be reversed.
Really what would happen is that would end up in the price of the goods to the consumer. And so that's the unfortunate reality of what these tariffs would mean.
The timing of tariffs, or lack thereof, keeping businesses on edge.
I think every day we get closer. But every day we get closer, if deadlines are extended, then that makes it more challenging.
For Nightly Business Report, I'm Kayla Tausche, Bedford Heights, Ohio.
Coming up, this week's Market Monitor prefers value over growth, and he has 3 names he thinks are worth owning.
In this age of on-demand services, consumers have become accustomed to speed and convenience. I mean, we want and even expect that new shirt to be delivered by tomorrow, if not by the end of today. The growing appetite for those services is creating new opportunities for many delivery companies. And as Kate Rogers tells us now, it is a market that is ripe for job growth.
Call it the Amazon effect. Customers expect the option for 2-day and now even same-day delivery. It's what we want, when we want it, and all at the touch of a button. And it's creating a boom for on-demand delivery drivers. Companies from Postmates with 150,000 couriers to Uber Eats with 300,000 across the globe are fueling the craze. An estimated 1 million contractors work in the retail on-demand space, delivering everything from coffee to prescriptions to groceries.
This is a white-hot market for jobs, particularly in grocery. The online demand for grocery is now about $20 billion for same-day delivery, $20 billion annually, and that's projected to grow to about $80 billion over the next 4 years.
Companies like Deliv are cashing in. The company has contractors in 1,400 cities delivering online orders for giants like Fresh Direct, Bloomingdale's, and Best Buy, feeding customers' appetites for quicker access to purchases, an expectation fueled by Amazon Prime.
Prime came out with 2-day shipping and very quickly became the standard. There wasn't really a business out there that moved physical goods that didn't have a 2-day option. And the same things now happen with same day.
And for CEO Daphne Carmelli, the demand for same-day delivery means staffing up.
We're hiring across the board for everything from the operations to the sales to the engineering to folks on the ground, across the board in all ranks.
Drivers like Wendy Magarin like the flexibility the job provides. She says she can make up to $25 an hour, including tips.
I started working for the Lyft because it's flexible hours. I can work the days and the hours that I can and I want.
It's not just Deliv adding to their roster. Analysts predict another 2 million contractors will be added in this space in the next 4 years. For Nightly Business Report, I'm Kate Rogers.
Higher drug sales help results at Celgene. That's where we begin tonight's market focus. Profits and revenue climbed at a quicker than expected pace thanks to strong global demand. The company also raised its full-year guidance and said it plans to reapply for approval of the multiple sclerosis treatment that was shot down by the FDA earlier this year. The shares of Celgene closed higher by about 1.75%. Alibaba said strong performance in its commerce and cloud computing divisions led to a better than expected quarter. A rise in investments weakened operating margins, but investors focused instead on the Chinese e-commerce giant's belief that the robust spending will accelerate sales. Shares were up more than 3.5% to 188.89. And a rise in online sales helped results beat estimates at VF Corp, but concerns surround the apparel company's jeans business, and that weighed on shares. The owner of the brands like the North Face, Wrangler, and Lee reported softer demand for jeans in the quarter and said it expects those sales to remain flat through fiscal 2019. Shares of VF Corp fell nearly 3% to $76.27.
CBS Vice Chair Sherry Redstone is reportedly walking back her demand that Viacom CEO Bob Bakish must hold a top executive position if Viacom merges with CBS. Redstone previously said she wanted Bakish to be second in command to CBS CEO Les Moonves, but that's something Moonves has resisted. So now Reuters says that she has dropped that demand because she is eager to get a deal done and she wants negotiations to advance. And both stocks were higher on that news. Viacom shares rose by 3%. Meanwhile, shares of CBS were up by 9% today. And shares of cybersecurity company Carbon Black made its debut on the NASDAQ today. Company priced 8 million shares at $19 apiece. That was the high end of the expected range, and it valued the company at more than $1.5 billion. And it was a good debut. Shares finished higher by 26% to $23.94. And Wells Fargo said today it's going to pay nearly $500 million to resolve a class action suit related to its sales practices, but the bank denies any wrongdoing. Shares closed up more than 1% to $52.41.
Time now for our market monitor, who says he likes value stocks over growth stocks in the market. The last time he was on was back in July. He liked Apple, which is up 22%, Amazon is up 51%, and Microsoft is 30% higher. Joining us is Ernesto Ramos, portfolio manager at BMO Global Asset Management. Ernesto, welcome back.
Thank you very much, Sue.
Congratulations on those picks. All three were winners, big ones at that. Let's start, first of all, with the fact that you are looking at value right now, and you have United Rentals, symbol is URI, on the list. Why do you like it?
Well, because it's a true value stock. It trades at only 10 times earnings, but its growth has been fantastic. They just reported a couple of weeks ago, and they totally beat their numbers. So this is a company that, as you know, rents equipment, industrial equipment, commercial equipment, construction equipment all across the United States and Canada with 855 locations. And they're doing fantastic in this environment of higher growth than we have been seeing for the last couple of years. So they're really in the driver's seat when it comes to the cycle, and they're trading very cheaply. So they've been doing very well if you can look at the price chart of that stock. That's the reason we own it.
Now, you've got a couple of the biggest banks out there as well. I'm curious, you're looking for value, but you don't think that the market's already anticipating higher rates for these banks? Citigroup, for example, why that one?
Well, both of these banks benefit from higher rates because of the fact that banks make more money when interest rates are higher on their deposits, and they tend to lend out on the longer end of the curve. But these banks are much more focused on the fact that their deposits are not paying as much as the short end of the curve. So they're making money. They haven't really raised their short-term deposit rates at all, while the Fed has raised 6 times. So they're making money over that. But the real story for both of these banks is returning capital to shareholders in terms of dividends and share buybacks. And they're doing that very, very well.
And we should add that your third pick, we're going to lump it together with Citigroup, is Bank of America. The symbol is BAC, obviously also benefiting from rising interest rates. Ernesto, thank you so much. Great to see you again. Ernesto Ramos with BMO Global Asset Management. And to read more about Ernesto's picks, you can head to our website, nbr.com. Bill?
Coming up.
Ahoy, mateys!
We're going to meet a couple of young inventors, those two right there, with a pirate-themed board game that is sold across the country. Great story coming up.
Life's journeys lead us in many directions, but sometimes it's what we learn and share with others that provides the biggest reward, even on a treasure hunt. That's what 2 elementary school students outside Chicago are finding ever since they got the bright idea to create a board game for a school project that's now selling in Target stores across the country.
Wild one.
Brenna Seawers and Olivia Wazalewski couldn't have known what they'd learn about themselves when a 4th grade project turned into a board game that they would call Ship of Treasures. That was back in 2016.
1, 2, 3, 4, 5, 6. Not opening that.
It's a treasure hunt. 4 pirates hoping to avoid sharks, cannonballs, and of course, the other pirates,
Draw your cutlass.
while racing to find treasures hidden by their opponents. That November, their original school project won the grand prize at the Chicago Toy and Game Fair's Young Inventors Challenge.
I can't think of words for this.
They won trips to Target headquarters in Minneapolis and to the New York Toy Fair, as well as several grueling months of tweaking with the former president of Pressman Toys, Jeff Pinsker, all in hopes of developing a product that Target could sell.
We felt like there'd be a real appeal to this product for kids to buy something and play something that's invented by other kids. Who knows better than what's going to appeal to kids than kids themselves?
They learned to mix elements of skill, like mapping, with luck. They also tweaked colors, materials, and imagery.
The 2 girl pirates are modeled after us. I'm the green one, and she's the red one.
They researched actual pirate terminology and things that happened on ships to write these cards so they would be realistic. And that wasn't something that I asked them to do. They took that extra step themselves.
That's hardly the biggest step these 2 have taken, however. Their community was rocked in February of 2017. Sophie Shields, a fellow student at Palos East Elementary School, lost her battle with cancer. Brenna and Olivia responded. Their game hit Target store shelves in October, and they were honored at a school assembly. And again in November, when the Toy and Game Innovation Awards named them Young Inventors of the Year. That's where they announced a portion of their royalties, about $4,000 so far, will be donated to Chicago's Lurie Children's Hospital, where Sophie Shields was treated.
It's pretty amazing. It goes to show the character and the ethics that this neighborhood really has and the connection that we have together.
It just goes to show how much power can generate just by people working together.
We decided, since she went to Lurie Children's, that we should donate to Lurie Children's in honor of her. We saw the sadness everywhere, and we just thought it would be the right thing to do. Industrial design.
Now 5th graders, these 2 are looking forward, even as their proud parents wonder how they can possibly grasp the lessons that they're already teaching.
That's pretty heavy for a 10, 11-year-old. I mean, she just wanted to do something. I think as she grows and as they both grow, they'll look back on this experience and think, oh, wow.
I don't think they both realize what impact they're having. I mean, this could inspire someone else to do the same thing. And if that does great.
Ahoy, mateys!
Hearts of gold? Their most un-pirate-like gesture might be more proof the most important treasures are hidden inside of us.
Pressman Toys has sold more than 40,000 copies of Ship of Treasures to Target. For more on Olivia and Brenna, go to our website, nbr.com.
What a great story. Finally tonight, as you know, tomorrow is the running of the 144th Kentucky Derby, and one horse has one of the biggest companies in the world rooting for it. We're going to show you here the horse seen winning the Florida Derby back in March is named Audible. Of course, the same name as the audiobook company that Amazon bought 10 years ago. But it turns out the horse is not named for the company, but instead for the audible that quarterbacks sometimes call in football. However, Audible.com has made a donation to a nonprofit that cares for retired thoroughbreds in return for promotional rights to the horse, and they'll have logos on it when it runs, and it's built a social media marketing campaign all around it. They made a full meal out of this
They sure
one.
did.
Yes.
Before we go, here's a final look at the Friday numbers on Wall Street. The Dow rose 332 points to 24,262. The Nasdaq climbed 121. S&P 500 was higher by 33. And that is it for NBR Tonight. I'm Sue Herrera. Thanks for joining us.
You have a good weekend.
Have a great weekend.
I'm Bill Griffith. You have a great weekend as well. We'll see you Monday.